Hey everybody, it's Daniel here from InfoRest. Hope you're all doing well. So BMO came out recently and said we'll have to wait for some sort of rate relief. Expecting some sort of rate cuts coming anytime soon in Canada. Throw that out of the window. It's not coming. And we heard that also last week from Bank of Canada when Macklem came out. They didn't hike rates, they didn't cut rates, they left rates where they were. But he came out and mentioned a couple of things about monetary policy, the rate cut expectation, potential rate hikes, and so on. So what did Macklem say? What did Bank of Canada say? They came out, they threw cold water on the hype over rate cuts coming very soon. All right, the markets, a lot of realtors, a lot of Canadians out there probably think that rate cuts are coming soon. Truth is, and according to Macklem and Bank of Canada, it's not coming soon. Rate cuts coming in the first quarter, forget about it. Second quarter, I don't think so. Potentially third quarter, fourth quarter, more likely. And that's where, we heard Macklem say that talking about rate cuts is too early, and in fact that if inflation picks up, we may even raise rates. Now, honestly, hearing Macklem say that, it's just a comment to scare the markets to lower that expectation, to not get especially the bond market, the Canadian bond market, all of a sudden rallying and bringing those yields lower, because they don't want any easing anytime soon. So another part of Bank of Canada's policy and part of their tools and their toolkits is their communication, is how they communicate certain things to the market out there, right? So if they're communicating and they're saying, hey, we don't expect rate cuts anytime soon, we may even hike rates, they're sending a signal that if the financial markets are trying to do any type of easing, if you're trying to get way ahead with the easing and those yields are coming down, don't do it, because if that easing continues and inflation picks up, we will not hesitate to hike rates, which will basically throw quite a tantrum in the bond market if that were to happen. I don't think it's going to happen. I don't think all of a sudden inflation's going to skyrocket. Hey, I could be wrong. There could be something that comes out that, a black swan event or something that completely shifts my whole view and completely blindside. I get blindsided by some sort of event that ends up pushing inflation higher. But I don't think so, because what I expect in maybe closer to the end of this year is for demand and growth to further deteriorate. And Macklem and Bank of Canada also mentioned that yes, growth, GDP, and so on, we're going to see the deterioration in that. We're going to see weakness in growth, or expect growth to continue to show signs or continue to weaken further, right? Which will translate into what? Which will translate into weaker jobs, which will also translate into softer inflation data, consumer price index. However, we haven't yet seen consumer price index truly drop to the level that they want to see. We haven't seen inflation drop to their 2% target. In fact, we've been seeing inflation sticky. We've been seeing the wages, we've been seeing rent, we've been seeing food prices, grocery prices continue to be sticky, continue to be elevated, creating inflation where it is, and creating that stickiness, which is why the central banks don't want to cut early. They don't want to be too early, because if they cut early and they make a mistake and inflation ticks up, then they have to go back and start hiking aggressively, which will make things worse off and will also look really bad for Bank of Canada. In fact, I think Bank of Canada is waiting to see what the Federal Reserve does, waiting for the US to make a move. If they start cutting rates, then you might see Bank of Canada start to do the same. They may wait and delay. They may do it after, even though it's very interesting to see that Canada was the first one to start hiking rates compared to the US, and US might be the first one to maybe start cutting rates compared to Canada. We'll see. It'll be very interesting to see that. But the reason to keep rates where it is right now is to continue to put strain on the demand side to bring that inflation down, because on the supply side of things, no central bank can control that unless you truly weaken the demand side of things. If you don't believe me, look at the oil markets. Look at the prices of oil. It's fluctuating up and down. The highest price, if you look at crude oil, US WTI, the highest price we saw, it hit around $130 per barrel. Ever since then, dropping from that price, coming down to around the $70 mark and lower, right? We haven't been able to see crude oil break above the $100 mark and move towards 130. Crude oil is also having a tough time, no matter how much bullish news comes out in terms of war, in terms of supply chain, in terms of what have you. You see crude oil under pressure because it's telling you a story there. The story that I think it is the demand weakness, and we're starting to see it globally. Look at China as a very big example of that. Now, the data has yet to show further weakness, to show really deterioration of a really big true signs of a recession. I believe we have yet to see it. I believe it will come. And when that happens, or if it happens, let's just say, if it happens, and we get demand continuing and continue to weaken further, then you can expect some sort of rate cuts to come in. Now, a lot of people are optimistic on the idea that, hey, rate cuts are good and we're going to see asset prices skyrocket like they have in the past. And I think that's a very wrong way of looking at things, all right? Because when the rate cut begins, yes, the central banks are initiating the rate cut cycle. Yes, the central banks are initiating, or what happens after rate cuts is the quantitative easing. But the need of quantitative easing and further rate cuts would be because there is a big issue in the economy, right? What that issue may be, we will find out if it comes, right? A lot of people speculate it might be in the commercial real estate sector, and it might have spillover effects into the banking and so on and so on. So at the end of the day, right, if we do get the first rate cut in Canada or wherever, in the US and so on, you want to be questioning that. Why is it? And what's the reason behind it? Has inflation come down? Has it dropped enough to the target? Because we've been hearing this target of 2%, 2%, 2%, higher for longer, right? What's the reason to start cutting rates? And I would like to take you back to 2019, where the US Federal Reserve came out and they did a 50 basis point rate cut. We also saw the US bond market start to price in further rate cuts in 2019. Everything was fine in 2019. There was no reason to cut rates. The economy was doing fine. What was the reason to cut rates? Well, the central banks came out and said we want to prolong the growth in the economy. We wanted to continue to go further and further. But why the 50 basis point rate cuts? Why was that needed? Right? So it makes you think that if we do see that again, if we get a 50 basis point rate cut, let's say in the summer, or we get it maybe sometime in September, October, November, right? Makes you think, why all of a sudden we're slashing by 50 basis points and not starting with a 25 basis points and going slowly, especially if this is a soft landing economy. A lot of people out there saying this is soft landing. Yes, we are in soft landing, but soft landing can change into a hard landing economy, right? So sure, we may be in soft landing right now. If that's the case, then why not slow the rate cuts? If economy is fine, you don't need to be slashing by 50 basis points if that happens. So I would say watch out for that. If you do get this sudden 50 basis point rate cut, it will make you start to think and ponder that is something okay? Are we expected to see something? Because just like in 2019 when we got the 50 basis point rate cut, what happened a couple months after that? COVID came, the markets dropped, S&P 500 down 30%, quick crash that we saw, right? So many times, also, if you look at past history, especially in 2007, 2008, right, when we had the real estate crash, we also saw rate cuts begin, and we saw in 2007 slow rate cuts followed by then emergency rate cuts afterwards. In 2008, things start to speed up further and further in terms of rate cuts. Thus, at the end, we saw this major problem in the US with the real estate market, right? So very interesting to see this slowly play out, and I think that the central banks are already late. I think the central banks have already broken something and will continue to mess things up further. And I believe that once those rate cuts come, I don't necessarily think that's a good thing, right? Because what comes after that is, sure, maybe when the rate cuts begin, you might have asset prices move up temporarily. But then if there's some sort of event, black swan event, some sort of crisis, commercial real estate implodes. Let's not forget, commercial real estate is a very big market, right? If you get a small percentage of that, and the commercial real estate are in the trillions, and you get a small percentage of defaults and banks under trouble because of these commercial real estate that's going belly up, then definitely that will have spillover effects. And I'm not talking about 50% wipeout or anything. I'm talking about a very small percentage of this commercial real estate market. All it takes is just a one digit, percentage amount just to create trillions of dollars wiped out from the economy, which will have shocking effects in the banking sector and so on. So, anyways, those are my take. Important week this week also. We have the Federal Reserve coming out this week. They're going to say something on Wednesday. Keep an eye on that, right? I feel that all eyes on Jerome Powell, on what's his expectation of rate cuts. He did pencil in 3 for this year. So it'll be interesting to see what he has to say, if there's any changes, any pushbacks, or does he continue being dovish and push the idea that yes, rate cuts are coming, they're coming further. Any comments on also quantitative easing would be very important. And these are things that we can also kind of speculate how Bank of Canada might react in the coming meetings. But let's not forget the data points. They're very important, especially the inflation numbers. Those are very important, and that will also dictate the Bank of Canada's moves. Until then, I'll see you guys around. Cheers. Have a good day. Leave a comment below. Subscribe. Hit the like button, bell icon to be notified on the next video. And I'll see you guys around. Cheers. Bye.